Now, this next question is based on the present prices of silver and gold. But what I've noticed that the further we move away from 1971, which is 54 years ago, the bull run is starting to work. It's starting to really rise rapidly. So the question is, on the website goldprice.org, it shows that gold's price has risen 41% from 12 months ago, and silver is 37.6% in Australian dollars. In one of Alasdair Macleod's reports, he said that gold could rise from here to the end of this year by 900 to 1,000 US dollars using recent past statistics. That's an increase of 30%, and silver could do even better. So, do you think that the continuing debasement of currencies will leave no option other than for gold and silver to rise?
Well, absolutely. It's without question what's going to happen and I'm not a gold or silver bull at all. Well, I just study history, and try to extrapolate it to the future, and I see what's happening around the world. I see, the base for gold and silver. Or the reason for gold and silver going up is not war or some catastrophe somewhere. That pushes it maybe temporarily up, but the long-term factor that determines the value of the metals is the deterioration or the debasement of the fiat money of paper currencies. And it's very simple that now I've many years ago, I also used to forecast price of gold, silver, and I can sometimes mention a price, but I've decided as a rule that it's totally meaningless to forecast price when you measure it in fiat currencies that are being devalued by the day. So if you say that gold is going to go to 10,000, what's the dollar worth at that time? What's the euro worth at that time? And that's really what is the important thing. So I think I'm more interested now, and obviously was getting older and wiser, hopefully wiser also, older definitely, so what. I am more interested in risk and direction of markets now than actually forecasting price. I mean, I see, if you look at a chart from 1971 to today, you had a big rise for 9 years to 1980. Then you had a 20 years sideways to down move, and from 1980 to 2000. And now you're getting a strong move again, and it's accelerating. So, and gold moves in these phases, if you want. But now we're in the acceleration phase. And we're now, it's not quite exponential growth, but almost, because for the simple reason that the money supply and debt are growing exponentially also. So I'm quite clear that, although now we've had a sideways period over a few months again, and it moves, as I said, in phases. It moves, takes a break, moves again. I also see that gold sometime between now and early autumn going to have another big move. As I said, I don't forecast price anymore. I call that a mug's game, because I've been a mug also, so I don't. I try to avoid it now by just saying, my very firm forecast is that over the next X years, and that's not going to be that long, but the gold is going to reach multiples of today's price. But as I said, that is just measured in fiat money. It does mean that the acceleration of the debasement of the currencies down, that's what's going to determine the gold price primarily. And then of course, you have the very interesting supply and demand situation, because now you have, all the gold is produced every year, 3,500 tons, say, is being absorbed in normal markets year after year. There are no major stocks anywhere of gold lying around, but it's all being bought. Half of it roughly for jewelry, and then part of it for investment and part of it for a little bit of industrial, very little, and then central banks. But the central banks are the interesting part of this, as we know, because since Russia's assets were confiscated by the US and the stupid Europe who just follows, we have a situation where central banks are not going to trust having their reserves in US dollars, treasury bonds, for example. So that we're already seeing, it's not new, it's happening, that we're seeing a shift from dollar reserves to gold. And that shift is going to take place over the next few years. They're not rushing in, the Western central banks or the BRICS central banks, or the Western are not buying at all, as usual. They will eventually, maybe, if they can afford it. They probably can't afford it because they're just buying, they're just interested more in issuing debt than buying gold to cover the deficits. But the BRICS central banks are buying a lot of gold, and that will continue for many years to come, in my view. So there'll be a continuous strong demand of gold from big investors, being central banks. They're not rushing in, as I said, because they don't want to push the price up, so they're going to do it slowly and systematically.
Yeah.
And of course, then, because they're buying, institutions will follow also them, and they're always followers. They never lead as institutions, pension funds, etc.
Yeah.
So institutional buying will also become much stronger. And today is only 0.5% of world financial assets in gold. 0.5% of world financial assets are in gold, which is absolutely ridiculous. And of course, gold couldn't take 10 or 20% of world financial assets now. One thing is, of course, the value of financial assets will go down with all the falls that I've been talking about, of asset classes coming down. But the only way that this increase in demand, and that will be followed by retail investors and everybody else, the only way that this can be satisfied, this increase in demand for gold and silver, will of course be by a higher price, not by more gold and silver being produced.
Yeah.
That's a just simple supply and demand equation.
Yeah.
This is not talking about, being a bull, a gold bull, or super gold bull, etc. It's just looking at A, the economic situation, B, the shift of investments from other assets by central bank, especially by the dollar assets, into gold. So we know that's going to come. It's an absolute certainty. And therefore, the gold price is going to be supported for many years to come, and not just supported, but it will be, as the increased demand will create a higher price measured in fiat money, and probably also there'll be wealth enhancement on top of that. Gold will not just go up by purchasing power percentages, but actually in real terms also. So it's going to be, as we said, it's so easy. It's a wealth preservation asset, and also one of the best assets for wealth enhancement, which it has already been in the last 25 years. Remember, gold has outperformed every asset class except for Bitcoin, which it's a special case. I don't call Bitcoin a speculation, in my view. Good luck to the ones who are in it. I think Bitcoin will fall when the Nasdaq falls, because they seem to go hand in hand, and I think Bitcoin will come down. But it's irrelevant for me. I'm not interested in it, so I'm staying out of it.
What wise decision.
Yeah, I think so.